Hello and welcome to another episode of the Property Lifestyle Mastery podcast. I'm Jackie Tomes and we are talking on this podcast about how to invest in property, how to work with investors, how to do deals and how to do all of that in a way that ultimately creates freedom. And on today's show, myself and Detail Dave are diving into the raising finance aspect of investing in property and particularly focusing on the faux pas, the raising finance faux pas, the biggest mistakes that property investors make when raising private finance. And we're talking about social media, we're talking about the assumptions you may make about others, we're talking about disappearing investors and why we need to make sure we have a good process along the way when it comes to raising finance. So many painful lessons and expensive lessons that have been learned along the way from ourselves, but also from mentoring hundreds of other investors, helping them to raise finance. So this is jam-packed full of golden nuggets. You're really going to love this. So let's do it. Hello. You got Jackie?
And Dave?
In South Africa, having just played a glorious round of golf this morning. And on our round this morning, we were debriefing on our every month. We run a pitch and pipeline practice session with our mentees, all designed to help people feel more confident with the raising finance process and the conversations. And so we always have a really good debrief after these have happened in terms of like what's the themes, what's coming up. And so that has spurred us into action on a inspiration for a podcast about the biggest reasons that people struggle to raise finance.
Yeah, and it's really fascinating. The pitch and pipeline sessions we run for our mentees is all about just practice, right? If you're in any other performance industry, you obviously go and practice the music industry, art, sports, athletics, and yet we don't really think about it in business.
Yeah.
It's so obvious,
Well,
right?
The thing is, you come from a musician background, and I was a actor, performer,
Yeah.
and so it's just like, you're right, it's second nature. You just have to practice the skills that you want to develop.
Yes.
For some reason, we just don't really...
It's like a lot of people just think you either have it or you don't. And that is so not true. And I see that more and more. Like, so often it's not about having it. It's just about being you and just making sure you're saying the right things. So that's not about having it, that's about knowing the right things to say. And I guess that's what's sparked this one, because we just get to see people and give feedback on what they're saying, and you kind of see all the things that go wrong where people are, but even just role playing, you can see where it goes wrong. It's fascinating. So structure-wise today, I thought we'd just start at the beginning of the process and work our way through.
Do you want to explain what you mean by process?
Exactly, the process. So in terms of the process of marketing yourself, getting yourself out there, that's the beginning of the process. Getting to meet people, getting them interested in what you're doing, and then that moves through to maybe having an initial meeting with someone, and then moving them through some sort of maybe a pipeline to the point that someone commits to investing. So chronologically, marketing through to a committed investor.
Mm-hmm. And this is what we call the investor pipeline process.
Exactly. So starting
Let's
at the
do
beginning,
this. Marketing.
Right, so at the very beginning, with marketing, you're generally putting yourself out there in two different ways. I think most people are using social media as a standard, a platform to get people to know who they are and what they're doing.
And networking.
And then networking, right? So, Jackie, you're our resident marketing guru.
Thanks, darling.
So what would you say you see in the marketing that goes out there as the most...
The biggest mistake is that people don't know you're working with investors.
Simple.
So stating the bleeding obvious, basically, they're like, oh, wow, that's really nice for those guys. They're doing this £3 million property deal. They must be loaded.
Right.
Well, that's nice for them. So, like, if people don't know that you're working with investors, they don't know that's even a thing that you do, and you can't assume that they know. And so therefore, if people don't know that you're doing that, there's definitely no chance they're going to invest with you.
And I guess it doesn't have to be in your face, does it?
No.
It's more about just mentioning it regularly.
Yeah. And I think that is the really important thing. Like, I hate being hard pitched to and sold to. I think we all do, right?
Yeah.
Like, we love to buy, but we hate to be sold to. So we like to know what's on offer that we could get involved in, but we don't want it thrust in our face if we aren't interested. So therefore, for me, it's just about telling everyone what you do. It's like, oh, hi, I'm Jackie, I'm a business owner. Rather than that, hi, I'm Jackie, I'm a property investor and I work with people who want to get their money invested but can't be asked to do the work themselves. Something like that.
Well, there you go. You're onto elevator pitch now. So,
But
and
that's
that's
part
true,
of it,
right?
right?
But I mean, even in going back to the social media posts, it's like a standard that everyone's probably putting out there, or should be, I would say, if you're wanting to raise investment. It's a very easy option. But yeah, just regularly finding a way to feed it back to mention in that post that you are working with investors. And it can be such simple things like, oh, my investors are so happy because the project's on target.
Or just had my a weekly call with one of my investors to share how the project's going. We're going a bit over budget at the moment, but we're going to make some tweaks to improve how it's going moving forward. So riding the wave of the highs and lows of property. And it's not about pitching to investors. It's not about any of that. It's just about, okay, she's working with investors. Done. So
simple. And then I guess in the networking event, that's the same. You just said it. The first thing out your mouth should be more about the investors. Because we all got to think about on a networking event, why are we there? What's the point of being there? And I would say the majority of people are going networking in property because they are interested to raise finance. And there are secondary reasons. They're thinking, it'll also be good to read contacts in my area, maybe tradespeople, maybe other people, see what they're doing. But there is always this high level, but it'd be really great to find an investor there. And therefore, it should be first and foremost of what comes out your mouth. I'm doing this thing in property by working with investors.
And it's not then going, are you interested?
No.
It's just saying, it's like, what do you do? Just tell people what you do. Just like a normal human being, like you'd introduce yourself. Someone says, what do you do? You just tell them what you do. And part of what you do is work with investors.
Yeah.
So that's mistake number one. That's nice and simple.
Very straightforward. Just mention it. Mention you're working with investors. Then people know.
Everyone thinks that it's like, where's the magical place that you find investors? And like, for me, it's far less about the where, and it's far more about like, what comes out of your mouth to every human that you meet, and meeting as many humans as possible and putting yourself in places that you are more likely to find people who might have money. So therefore, maybe investing in a networking event that's got a higher cost to entry might therefore mean there's more likely people who have got money there. Or like, charity balls where you maybe have to pay a good chunk of money to be there. Like, this isn't rocket science, right? And we all just think like, once I know where all the investors are, then I'll actually do it. No, they're everywhere. They're just people. It's just about like probability. And actually what's more important is every single human being you interact with knowing that you work with investors.
And I think that brings me nicely onto point number 2, right, of our list of biggest blunders.
That's such a better name.
So point number 2 for me is like, we've now reached out, we've put our social media stuff out, we're at the networking event, maybe done our first elevator pitch to someone, said your first spiel, and now you're into a conversation, and in social media it might be that someone reaches out to you with a direct message and actually starts asking you about stuff. Now we're in a conversation. So the next thing that people do is that they assume that someone doesn't have money.
Oh yeah.
Right? Just an assumption is made at some point in the conversation very early on, oh no, this person hasn't got any money.
And I think there's this generally wide-held belief that, for example, I think property events, this is like definitely a belief that sabotages a lot of people. You do not find investors at property networking events. Is this like commonly held belief?
Yeah.
But they don't have a neon sign above their head saying, I have money. It's like you've got to get to know people, and then you find out by getting to know people who might have money. But if you are assuming that no one has money, your subconscious will basically be looking for all the reasons to prove to you the fact that that person doesn't have money. When actually it is true sometimes, but it's not true all the time.
Yeah. So I think when you talk about that first conversation you're having with someone, where would you say how would you go about kind of ascertaining if someone does have money or not in a way that makes you feel good that you haven't made an assumption?
I guess my question would be why are you here this evening? Like, what are you looking for? What's your biggest challenge at the moment when it comes to investing in property? If someone's like, well, I'm just really struggling to find good deals, that to me would probably potentially infer that money is not the problem.
Yeah.
So like, just asking and trying to understand what the other person's problem is.
Right. And what I think we've had it quite a bit, where you meet someone who just, they say they're in property, you're in property, and then the automatic assumption is they don't have any money. So I guess they wouldn't be interested in investing. They might have money, but they might not be interested in investing just because they're in property. So I guess what would you say to someone around that fact? Like, you meet someone who's in property, why would they want to invest in you rather than just doing their own deals?
Because it's hard work, man. like finding good deals takes time, and you've got to have a good process, and you've got to be committed, and then you've got to deal with doing the whole deal thing. Like we're getting to the point that, you know, we've got a good amount of experience in property, and like now we are getting to the stage that we're investing in other people, and I just like property is not easy, and so therefore to be able to collaborate with others to get capital working, just because I can do deals myself doesn't mean I want to always do the deals myself. So I think experienced investors are often people just go, oh well, they're not going to invest. They're not going to invest.
I think it's the opposite. I think when you meet an experienced investor, they usually have, if they've done really well for themselves, they usually have cash sloshing around in some way or another. They've usually built quite a pot of capital that they're working with, and they don't always have deals that they're wanting to put that into, and they might well be out there looking for the next young gun.
And if they have got money and they are doing their own deals, it doesn't mean that they've got a deal at that point in time. And they could have £500,000 sitting in a bank account, burning a hole in their pocket.
Literally waiting for the planning permission to come through on their massive commercial conversion, sitting there thinking, planning's probably going to be 9 to 12 months. It would be really great to get that money invested with someone. Yeah. It's just, these people are not, like, they're really good investors.
Yeah. Because they get it.
Yeah.
Yeah.
And I think just putting that across simply is like, we are property experts, we do our own deals, and yet we invest with others.
And we work with investors.
And we work with our own investors, we invest with others, we invest.
And there's also this pendulum swings, right? It's like, oh, I've got way too many deals, and the capital is like not quite balancing out. And then you have too much capital, sometimes there's too much money, and sometimes there's too many deals. Yeah. And like that's the age-old problem of like doing this professionally in property, is like trying to keep those pipelines balanced. But the problem with balance is you're never really in balance. You keep falling off the balance beam and you get back on again, and then it swings the other way. So yes, make no assumptions. It's that really annoying thing. It makes an ass out of you and me.
Okay, so never assume someone doesn't have money. Always ask lots of questions to find out. And I guess it's also trying to find out their pain points. So even if they are a property investor, you might ask enough questions to find out they're actually finding they've got a lot of struggles in property and they would be interested to work with someone else.
I've just actually realised having this conversation, it's like, you don't ask people, do you have money to invest, as the opening gambit, because that's what they have. And they're not out networking because of what they have. They're out networking because of what they don't have. So therefore, focus on what the thing is that is causing them the problem, not the thing that they already have.
Okay.
So for example, so basically this is basically always getting down to what is the pain and the problem that someone has, and focusing on, is there a way that there's a shared solution between what my problem is and your problem is, and if it's a different problem, maybe we can complete each other's pie.
Complete the pie. Okay, let's go on. So you've now met someone you actually think they could have money to invest. And hopefully you've made no assumptions, and now you're thinking this person has money and I think they could invest. The next biggest thing that holds people back that I've seen is not feeling worthy of the money, not feeling good enough in some form or another for that money.
And this is largely subconscious.
Yeah.
And I think then you basically, what we see happen is basically the reasons why it can't move forward beyond this point. Sorry, got a frog in my throat. I think sometimes people think that they aren't meeting anyone with money, not really because they aren't meeting people with money, but because if they do meet someone with money, then they would have to actually do something about it, which would mean that they'd have to feel good enough, but they don't. So therefore they just think that no one has money.
So it becomes the root cause of the assumption. And it might not just be you not feeling good enough. I do think that's a standard, a classic, is people do have this underlying sense of insecurity around their worthiness of being good enough. But it might not be you specifically, it might be that you don't think your deals are good enough. And that can really sabotage how you talk about your deals. Because I think a lot of people hear the great stories of these incredible deals, all money out, commercial conversions, very exciting, very big. And they think their poxy little 1 beds or 2 beds that they're doing just can't possibly stack up in comparison. And I when I hear someone do a pitch about their model, about what they're doing, their product, as it were, and they talk about it, you can immediately tell if they think what they're doing is good or not. And when they talk about it, if they don't feel like it's good enough, it's almost like you're trying to sweep it under the carpet. Like, oh no, yeah.
Don't look at that. It's not really good.
Yeah. I just do 2-bed houses in whatever, Northampton. I just do them as buy, refurb, refinance. Yeah. And it's like a sweeping comment, and it's the opposite of what you need to do. So when you're trying to get investors interested to work with you, you've actually got to do the opposite. You've got to make it sound your
You've
product.
got to put the benefits forward.
Yeah, you've got to make it sound sexy. You've got to make it sound something that's fun and good, and it doesn't have to be exciting like big. It can be exciting like scalable.
I guess this is what does annoy me. We've started running 2 property networking events, one quarterly and one monthly. And a big thing that I'm doing as part of that in terms of what's different about us is I just wanted to stop being about these these amazing deals, because it doesn't have to be the most amazing deals to be amazing. And I think basically the comparison is the thief of joy. So if we can all be far more open and honest about actually, I do these great deals, but don't just put the best deal up on the slide. Show you the average of what happens, and actually, I think that just helps us to really benchmark ourselves a lot better, rather than us benchmarking ourselves against the 1 to 5% of deals, which is not every deal is not like that.
I think also everyone's idea of what a top deal is different. And I think you see these people with these epic deals that are all money out and really exciting and sexy, and you kind of think that's the epitome of a deal, but actually they're probably much higher risk and they're probably not able to weather problems happening as well, and they probably actually out the other end have a bigger chance of the downside happening. That's what you're buying into with that deal, whereas it could be that your model is much less conventionally sexy but has a load of risk mitigators in that make it way more reliable and way more likely to make the person the returns they're trying to get. And be something that someone who is more risk averse would be like, that's the thing I want.
I just started thinking while you're saying that, and that's why I married Dave.
Risk averse?
No, just like, there was the sexier option, but he's far more solid and reliable, you know? And there's actually sexiness within that.
Dave, solid and reliable, potentially sexy.
Potentially sexy. I found the sexiness in it.
So yeah, and I've definitely seen that many a time when someone talks about their model and they basically undermine the whole pitch by sweeping it and making it seem like it's not good because they just don't believe it's good enough. Right?
Yeah. So just there are upsides and downsides to everything. Just make sure you know what the upsides are to yours, understand the downsides and what the mitigant is, but just make sure you're really clearly explaining that to someone. Put yourself out there.
Yeah, great. Okay, good. Next on the list, right. So now we get past, we've spoken to them, we're now feeling great, we feel worthy, we feel like our model's really good, and we're selling our product really well now. And then I think we hit the next barrier, as it were, which is that if things start going well like that, you start having conversations, then you actually have to start committing to the next stage, which is having another meeting, and actually then you start being confronted with the harsh reality that is someone may actually invest with you, right?
No!
And I guess this primarily is more people who maybe are earlier, maybe haven't worked with investors much yet, or it's a newer model. But the thing that comes in is that the fear of messing it up, of going wrong. But I have to say, I've seen this with people who are more experienced, who have already worked with a lot of finance, but may just be in a particular phase where they feel like things have gone wrong recently, and then it starts creeping in. But it's a fear at that moment of messing up, and what it causes is a massive amount of procrastination. It just like
a pullback, basically.
A pullback, yeah. And instead of forging ahead and making stuff happen, it's like, why haven't you reached out and connected again with that investor? Why haven't you booked in the next meeting? And there's no real reason.
I just can't quite get round to it. I'm very busy firefighting other operational tasks. My project needs my attention. And there is time. I mean, there really is time. And that's why we don't allow people to blame time anymore who we mentor, just because it's like, it's bullshit. It's not time. It's what you are probably afraid of that is actually, it's just keeping you in your comfort zone, basically.
Yeah. And I guess everyone has this general fear that things could go wrong, right? And the problem is when someone else is putting their money on the line, it kind of forces you to confront that and you have to accept that, yes, this person's investing with you, and yes, it's on you now. And you have to you're going to have to step up and do a good job and do your absolute best. But in life, there are everything's got uncertainty in it. And you just got to accept that and say, no, I'm going to do my absolute best. I'm going to make this happen. And it's now or never.
But I think there is a whole practical bedrock underneath all of that.
Yeah.
Do a damn deal analyzer. Make sure you've got all your line items on there. Make sure you've got a best likely worst case scenario, what could go wrong. What are you going to do with the money that gets left in at the end? How hard is that money going to work? What's the exit plan B if the market changes? Don't get caught with your pants down because you didn't do your homework. And like, if you've done all of that, then cool, just go for it. But like, I think it's a bit sad, I think, generally, because I think those people who are generally good at forging with investors, not good. A proportion of those who are good at forging with investors are good at just creating self-confidence within themselves, no matter what's actually what homework they've done, and they eventually get caught out.
Yeah.
And I think it's sad because I think actually a lot of the people who are very diligent, very good with their numbers, they've done all the homework, they've got all the plans, they are the ones that probably hold themselves back more from moving forwards with investors because they're scared. But if you compared about the quality of their work that's gone on underneath to analyse that deal, go with the person who hasn't put themselves out there as well is often a better option.
Yeah, because they basically are holding themselves back because they're worried, and that fear, that
make
worry
them
is what
good.
makes them good, because they are actually checking all the exit plans and doing all their due diligence and really thoroughly because they're scared. So that could actually be a really good partner.
Yeah, but I guess if you're someone who is like that and you just, therefore, you've got to know that you've done the homework and just put it to one side and just then go for it and know that you're going to do the best that you can and keep on top of it and have a good plan for that. And as long as you've chosen the right investment partner, like, stuff is going to go wrong. If you're scared to work with someone because you feel if something goes wrong, they're not going to be an enjoyable person to deal with, that's a worthy question to consider. But ultimately, if you've got the right people that you're working with and you're good at communicating, we put communicating on this list. Let's come back to communicating. Because a lot of stuff can go wrong. And as long as you communicate and make good plans, people are all good.
People are all good, yeah. Okay, good. So
sorry, that was a bit of a rant there,
yeah,
wasn't
she
it?
was off on one.
Pull your pants up.
So I think this brings me to the next procrastination fear, as it were, kind of a thing that holds people back. Around the same period when you're starting to talk to investors and get some sort of, good conversation going, you then hit a thing called FCA regulations.
Yes.
And again, for those who are more diligent, those who are wanting to do things by the book and do things properly, less fly by the seat of your pants type people, they want to do things right and they want to do things properly, and FCA regs become a barrier, become a problem, a thing that means people have said I shouldn't do this, people have said I shouldn't do that, I'm not sure, and then
just for those who don't know about FCA regs, so FCA, the Financial Conduct Authority, has basically rules about how you can promote investment opportunities as someone who is unregulated. That's basically the high level what we're talking about here.
And that's the primary one that most people become aware of. The secondary one, not to go into too much detail, is how you can structure your deals with investors.
Yes.
There's very clear rules about how you can structure them, and there's very clear rules around what you can promote and how you can promote. Now, like, in the end, these things are here to protect the investor, and I think that yes, go and do some research if you want to understand them. I've done a lot of research and I understand them as deeply as I possibly can because I wanted to make sure I could overcome this barrier. Or come on our Raising Finance formula and watch me talk for 40 minutes about FCA regs, and then you'll understand them much better.
Then you'll understand how sexy he really is.
If you want to understand FCA regs, come to someone who's done the research and to give you some opinions so you know what you can and can't do within the regs. Or just understand that the very basic level of how you communicate with people has got to be for their protection. And the primary thing that all the FCA regs are doing is trying to protect them from sharks. And so the methods they have in place is so simple. It's like all you have to do is not tell them, not offer them a product until
you know if it's appropriate. Which if you should do, because you should be asking enough questions. I'm not sure we covered that one yet.
It's coming. So anyway, FCA regs, don't let it hold you back. Just get out there and talk about stuff. And do you know what? I would say do some due diligence on it to understand how you should be doing it. But don't let this become a barrier. And we've seen it where people have talked to people and been so scared that they haven't wanted to say anything about their product. They're like, it's almost like they don't have a product, and the person's asking very key questions.
So where do you invest? What do you invest in? How much money do you need? Well, I can't talk to you about that until I've on FCA regs, and they just seem like you're being evasive.
That's the problem. As soon as you do that, you become evasive, and there's plenty you can get out there without. If someone's asking you a direct question about what you're doing, how it's working, you can answer those questions. That's not wrong. It's just you can't turn around and go, would you like to invest? I can offer you 10% returns. Now you've broken the rules until you've asked more questions. So anyway, FCA regs, don't let them be a barrier. Right, I'll let you choose the next.
Well, let's just go on briefly to communication, because we've just mentioned it there.
Yeah, okay.
Or you do hate me because I'm skipping ahead in the process.
Probably.
I'm skipping ahead in the process. I don't want you to hate me. I want you to love me and find me sexy as well. So let's carry with this question asking then.
So that brings us, and that's really nice, segue, that's the word, segue, because the main thing you have to do with FCA regs is to understand the person and their situation. But it's not just FCA regs that requires that. To be honest with you, you've got to just ask loads of questions.
Good ethical investing requires that.
But also just to understand the person, like you want to get to know them. So asking questions is more important than talking about what you do. Past the elevator pitch, basically, you've got to ask loads of questions. And I think this is for two reasons. One is ethical investing and getting to know them and understanding that what you're going to offer them and working together is definitely the right thing for them. And because it becomes very quickly obvious if you ask enough questions that your thing isn't right for them, or if it is exactly what they need. So that's one side. And then the other side of the coin for me about asking questions is, like, how can you sell something to someone and say this is the right thing for you unless you know it is the right thing for them? Like, if you don't know it's the right thing for them, you're now a snake oil salesman. You're now someone who's trying to sell something, push something on someone that they don't necessarily want or need or like, and now it's really bad sales. But sales is a very simple matter. If you have the thing that someone needs and wants, then present it. Now you're selling. And then present it to them. But you can't present it to them in a non snake oil way unless you know what they need, want and desire. So asking questions is step number one to very nice, lovely, ethical sales processes. And
I also think that doesn't then mean that, because it might be that you're asking a load of questions from someone and they're like, oh yeah, I want to joint venture with someone and build a portfolio together, and I've got 200 grand that I want to invest to do that. So maybe I'm sitting there on a call with someone listening to this, and I'm like, okay, cool, that's really great. From my perspective, we do joint venture with people, but at the moment I'm not taking on any new joint venture partners, and when I do, the next one, the minimum investment will be 2 million. So obviously that's not something that there's going to be synergy on between the two of us there, but we do work with investors who just want to loan money, minimum investment 100k on a fixed rate of return. But it doesn't sound like that's really what you're looking for. So I can go and suggest other people who you might want to have a chat with about the equity investment for 200k. And sometimes they might go, actually, no, I really do like you guys, and I would be interested potentially, even if I can't get to the equity point at this, I would like to work with you. Maybe it's a smaller investment, we could do that. And then you can have that conversation. But I think you've asked the questions to understand what they want. That doesn't mean that you then have to try and figure out how to give them what they want if you can't. Like, you do have to know your own boundaries and what you're looking for, and then say what you are, like what's the parameters with what you do, and then maybe there's somewhere in between.
Absolutely. And I think that understanding of your boundaries and being super clear with them quite often just allows you to put forwards what you're doing in such a clear way that someone is more willing to buy into it, even if it wasn't exactly what they thought they wanted. Because actually, once you position it and put it forwards to them, they suddenly realise, I know that actually does sound like a really good option. Yeah. I think I would like to get some of that, thanks. Because they didn't realise it beforehand, but once they started talking to you, it becomes clear. And I have to say, the question asking has to go way deeper than just, what are you looking for? I'm looking for a JV partnership, I've got 200k, I want to own property. No, that's like surface level 101. We need to go deep. We need to be like, why are you wanting that? Why are you wanting to own a portfolio? Why are you wanting to own the property? What are you trying to achieve? Are you looking for a passive income? Are you looking for solid, reliable income stream? Or are you looking for a long-term growth of wealth? Like, what is your motivator and driver in investing in property? In fact, what's your motivator and driver in investing altogether? Like, you want to understand the literal reason they are trying to put their money into something, anything, whether it's the stocks and shares, it's an ISA or property. And once you get to the bottom of that, you also alongside that you need to understand their risk profile. Like, are they high risk? They're happy to risk it all on Bitcoin, or are they the type of person who literally doesn't want to lose a pound? Like, these make such an impact, because if someone comes to you saying, I want to do a JV, I want to own property, and I've got 200k, and then
my motivator is that I really need some passive income. Like, I don't want to be at all involved. I don't even really like property. I just want a passive income.
I want a solid, reliable, definite £1,500 every month, because I'm leaving my job now and I definitely need that money coming in.
And I need that within 3 months.
And I need it within 3 months. And to be honest with you, I don't really want there to be much chance of my money, of not getting my money back. I want to know that I'm going to have it back in 2 years' time for sure, because I'm going to go do this thing with it then. My God, this person is not right for a JV. He's literally said, I want a JV, but every other word out of his mouth has now confirmed he should be a loan investor, because loan is the right thing for those motivators, because that's what's going to deliver those results for him. And you've got to ask those questions to understand that. And you, as the property expert, are the person who understands what types of property investment give certain things. And the ability to convey that to someone is part of helping them, advising them, guiding them.
Yes, and because I think if you are a hands-off investor, there's a chance that you might not be in property at all, or you've just got this perception of what it's going to be like. And I just think so often, the ridiculous answers to some of those questions that I have had on initial phone calls, I've got 50 grand to invest and I'd like a 10 grand passive income within the next 12 to 18 months. I'd be like, okay, cool, that's great. You've got some lofty goals there. That's not something I'm going to be able to help you with. So yeah, that's very unlikely to happen, basically. And just to push back on that and just say that's not realistic what you're going to get from that amount of investment. And that's okay. You don't have to be just the yes man who says yes to everything. Just being open and honest, and it might mean they don't invest at that point, but just give them 12 to 18 months, let them try it, and let them realise that was totally delusion that was going to happen, and then come back around and say, actually, you know what, this property stuff's actually really hard. If I can just get a good return on that money, I'm actually going to do something else.
Yeah. Absolutely. Great. So there we go. Asking questions is the key, I think. It's the key to a great relationship. It's the key to nice, ethical, easy sales, because you know for sure that what you're offering is exactly what's right for them. And it's the key to a good relationship moving forwards, just generally.
And as just a slight aside is, I think, just keeping on going long enough with raising finance is not something we've written down, but that for me is one of the big mistakes people make when raising finance. You just got to keep going long enough, because at first it's really you've got to put a lot of effort in for the returns. Yeah. But over time, when you keep raising finance for long enough, all the people who weren't quite ready or tried to do investing in property themselves and realise it was really a bit of a shit show actually come back around, or someone sells their house, or they tell someone about you, and it just becomes ridiculously easy.
Yeah. Yeah.
Sorry to sabotage your flow
Absolutely.
again.
Absolutely, it's fine. I can cope. Right, we're coming to the end anyway. So we come now on to the final part of the process, where you've brought them through, you've found out, we've asked all the questions, you've found out that your offering is exactly right for them, you've managed to explain that to them in a way that they've now said, yes, you're right, I definitely love that, it's going to give me everything I need and want, and I'd like to get invested. Yes, I'm in, basically. And you're now sitting there going, all right, okay, great, they're in, deal's not quite ready yet, and you turn around to them and you say, that's okay, great. I'll let you know when I've got a deal. Boom, boom, boom. Epic fail. Or similarly, the other way around, they say, yeah, I'm in. Let me know when you've got a deal. And then they walk away, part ways. You say, yeah, great.
Okay, great, yeah, we'll do.
Boom! So this is one of the biggest mistakes people make, because what you've now let happen is you've got to the point of commitment, but you actually haven't
got commitment.
It's not real commitment. It's a verbal suggestion that they are interested, right? How do we get someone from that moment where they're, I'm in, to actual, true, real life commitment? Go on, Jackie. Hit us with it.
So this is a problem that we face many, many times. Just that people say that they're interested and they don't then follow through. So for us, we started doing this thing called heads of terms, which was just laying out in layman's terms on a one-pager how it is that we are agreeing to work together. All the conversations that you've had, just write it down on a Word document, summarize the plan, timeframes, money, returns, what you're going to do with it, the whole lot, and then you both sign it.
Sign your name to it.
You sign your name to it. And I think it's amazing the difference that feeling creates when you have made that shared commitment for this period of time to do this thing together. And And then it's very important that you explain what the process is, which is actually part of what you should be doing the whole way through, to just basically explain we only work with investors that we understand what they're looking for and that we know that we can help them to achieve that. We don't find deals for investors until we have gone through the process of doing all that, agreeing how we're going to work together. I'm out there looking for deals. And once we've got a commitment to work together, I'll be looking for how I can place your money in a deal that I will be sourcing. But until that point, I don't send over any deals because we've got to make sure that we've got that commitment for how we work together first of all.
And I would say it's key to be setting your time frames as well. So up front to say, okay, once you're committed, once we're ready to work together, it's going to be 3 months, up to 3 months before a deal is found. In most cases, 1 month. We normally have something secured in 1 month, but in some cases it will be a bit longer, and that's part of the process. So when you sign a heads of terms, it's signing to an amount that they're going to invest, but also a time frame in which you need to actually deploy that money by. So you actually have to say within there will be like, we will deploy your money within 3 months, and then that means you've got them committed for a certain time frame. Because what happens, most of the excuses that come up, most of the flaky investor excuses are things like, oh, I just put my money elsewhere, so sorry, or what you've just sent me doesn't quite hit my criteria. So that brings me to the next point. What your heads of terms need to do is just lay out what does a deal need to look like?
What are the parameters?
What are the parameters the deal has to hit for the investor to be happy to invest in it? So you need to literally be able to say to them, okay, the deals that we're doing are in this area, we're generally getting these returns on them, it's this type of tenant, or whatever the parameters are that you're kind of explaining about a deal, so that when you finally do send them a deal, as long as it hits those parameters, they've got no reason to say no. So we call these our deal criteria. Simple, and mostly you only need 3 of them, really. 3 key criteria that a deal has to comply with for when you send it to the investor, them to be like, yes, that's exactly what you told me. Yes, of course I'm in, because there's no other reason to say no. And as long as it hits the criteria and it's as they expected, then they're on board. And that's what you put in your heads of terms. So they can't turn around and say, oh, it doesn't quite hit the criteria I'm looking for. No, you've already had that talk. It's in the document. You both signed to it.
And I think it's also a negotiation point as well. Like, it could be like this is 3 months, and then what happens after 3 months? Like, we did have one example where it was like, if we haven't found a deal within 3 months, we'll start paying you some sort of nominal interest on your money, or starting to let that accrue on the deal. So basically, and just find out what's the intersection of what works for all parties to mean that there's that comfort on both sides to progress together.
Yeah. So that I guess brings us to the last bit. So hopefully you've gotten to this point, you've gotten someone committed, you've actually gotten maybe even signed a heads of terms. And now we come to Jackie's other point, because by this point it's been obvious. We've reached out for meetings. As long as we haven't held ourselves back with various procrastinations, we kept on communicating and talking to them with meetings and getting them on board, making them realize they want what you have, and then you've got them signed up. And then you go silent. Yeah. Right? A lot of investors go silent at that point, both sides. Just going, it's like, yeah, great, I'll see you in a bit once you've got a deal. How would you deal with this part?
Just keep telling them how much work you're doing. Because like finding a deal takes a lot of work, and you just got to communicate. And I know it's annoying because there's a million other things that you've got to do, but just put like a weekly recurring reminder in your Asana, or whatever task that's the management is doing, just say, update Malcolm on how it's going. And just a very quick one, send a voice note, just do whatever you have to do just to say, this is all the actions that have been taken this week. We identified a couple of things, offers have gone in. Just explain what's happening, because they don't know that's what you're doing. And it's so annoying to have to do it, but you do have to do it if you're trying to keep someone's buy-in. Yeah.
And that's the thing, like once you stop talking to someone, they go away. You just don't know what they're thinking. You don't know what they're going away and seeing elsewhere. And give it a month or two, and you finally get your deal, and then you go back to them. And yet, if you haven't been communicating, if you haven't found the deal, they could suddenly turn around and say, okay, no, I've decided I'm going to do something else.
I haven't heard from you.
So I'm just going to do something else. But if you were communicating either weekly or maybe fortnightly even, somehow you stay present in their mind as something they've committed to, and that they now realise, okay, yeah, he's putting work in, he's doing something for me, and they're much less likely to then go elsewhere. Now, it's obviously you can still come across people who will let you down, even if you show all that effort, but honestly, it's all about percentages, and they are so much less likely, percentage-wise, to let you down at that point. And it means that when you get to 2, maybe 3 months, and you might have had a dearth of deals, and you might be hitting the end of your time frame, but you've shown them all the way through just how much effort you've been putting in, and you then get to that conversation, you say, look, it's been really hard, I've been working so hard, I had all these deals, 10 deals I put offers in on, and none of them worked out, I expected them to, but I've still got follow-ups to do. If we can just agree another month, I'm sure I've got 2 that I think will drop. It's a much easier conversation to have if you've been communicating and they're aware of what's going on. Yeah.
There we go.
So that's it. And then as long as you communicate, get the deal agreed, money's in the bank, and I would say carry on communicating. That's the final thing. So we're talking today about raising finance, but honestly, from the moment the deal's secured and the money comes in, the next job is keep communicating, some sort of regular updates, just to let them know how it's going so they feel comfortable.
And particularly, and maybe there's a whole other podcast that we do about what to do when a deal doesn't go to plan and you've got investment partners on board. Maybe we do save that for another one.
Save that for another one.
Because it's, I think we see a lot of behind the scenes and hear a lot of behind the scenes from both investors and people who are doing their own deals, and it's very insightful.
Yeah, we'll cover that on another one. But simple answer, communication.
Yeah.
Very simple. We'll do a whole other podcast on that.
So what's your main takeaway for people off the back of today?
To follow those 8 steps. Don't do those 8 problems.
Mine is Dave is very reliable and sexy. No, mine would be that it's a real combination of, I guess it's like how your confidence and then the personal beliefs that then hold you back, and then just a lack of understanding about the overall process to give you that kind of roadmap to people going forwards and investing. So just keep trying and don't lose heart. It's trial and error, and there's a lot of different facets to raising finance, and you might be finding lots of people who are interested but nothing is coming through and landing. So you might have to listen to this a few times as you go through the process of raising finance, and just keep grabbing out the nugget that is relevant to you at that time. So good luck, enjoy that process of raising finance. It's just about making friends. Oh, that was a really fun one to record. It is amazing how much you just learn more and more as the years go along. So fantastic to be able to share that with you. If raising finance is something that you're focusing on at the moment, maybe you're having some struggles, there are a few ways that we can help if you would like some more support from us. We run an online workshop called the Raising Finance Formula, which is live on specific dates throughout the year, run by myself, Dave and Dom, all about the raising finance process and the different aspects that you've got to nail. We also have an on-demand training program called Investor Strategy Intensive, which you can watch anywhere, whenever, in the middle of the night, and it's all about that finance raising process. Or if you are an experienced investor and you are wanting some more one-to-one guidance and support from myself, Dave and Dom, you can check out our Dealmaker Accelerator program, which is all about how to raise more finance and do more deals in a way that ultimately will create freedom. So the links for all of those programs and offerings are in the show notes to find out more if you are interested. So this time next week, you are going to be joined by myself and Ginny Lean and Jeremy Grigg, and we're going to be talking about avoiding overwhelm by getting the right team and systems in place. A really wonderful conversation. You're absolutely going to love it. So until next week, have a fantastic week ahead.